Mr. Eckstein had mentioned the home builders and the loss carryback is something that you're interested in. As you know, in the stimulus package, we'd introduced that as one of the things that didn't end up making the final cut. I know the Senate's still looking at and maybe the future housing package that's still going to be coming up. And let me yield to Mr. Buchanan.
Thank you, Madam Chair. Mrs. Ball, I wanted to ask, you talked about soft collateral, just for the audience and that. How do you define that in your mind? What soft collateral?
From what I understand from many bankers, when you have your inventory that you sell, such as in my case, or in a restaurant even, I sell jewelry. Well, the jewelry leaves the store. So even though in my store I have $3 million worth of collateral to me, they will not look at it as collateral because it leaves the building. I lease where I am. I don't own the real estate. So therefore, I have no collateral that the banks are willing to loan me a business loan on.
Yeah.
And it's
just
not
out of curiosity, in your industry, do you own that or do you pay for it? Is it kind of on consignment when you say soft collateral?
When you're an independent jewelry store, you have to buy the majority of it. There is some that's on memo, but the majority you do have to purchase. And it's not even just the jewelry industry. There's many other businesses retail businesses that are set up the same way as mine.
And when you look at, Sarasota or just that region, we're talking about tight credit, but it's a lot more than tight credit. I mean, in our case, we've got property insurance challenges. Property taxes have gone up a lot over the years and haven't been adjusted. You got now the cost of oil and gas and, everything at the pump. What do you see other than the tight credit market is the other big issue for you in your area? Your biggest area. When you're talking with your customers and that, what is the biggest thing they're talking about today?
Well, more on the local level. Property taxes, insurance, homeowners insurance, of course. Gas is a big issue at this point. And I think that's part of the problem with the economy. Even though the real estate market is so terribly down, a lot of people that do have extra income are not spending it because they just don't know what's going to happen with the economy. So it's a no-win situation all the way around.
Yeah. And let's say if you had access to additional capital, would that, in this environment, in your case, make a difference? I mean, what would you do if you had it? I mean, is the market there to expand your business, for example?
Well, in all honesty, I'm in a holding pattern where I'm sitting back waiting to see what is going to happen with the economy. Once we turn around, and I'm sure that we will, I mean, this happens from time to time, we will open another location. I hope that we weather the storm and we're able to do that. That is my goal. Right now, I'm in a holding pattern. I'm sitting back hoping to survive, in all honesty.
Okay. Well, I appreciate your comments on that. Ms. Hollingworth, let me mention, in terms of your business, you brought up, I thought, predatory lending practices are detrimental to the development. What did you mean by that?
Are you referring to the credit card interest?
Yeah, okay. Stuff like that.
Our firm, along with probably the majority of small businesses, utilize credit card debt for various things. For example, when we mobilize to a disaster site, I have employees in hotels for maybe months. Sometimes we have airfare. All of that gets charged on a credit card typically. So while we have a very favorable lending rate from our bank, and we try to pay our credit cards off as soon as possible, these 17, 18, 19, 20, 22% interest rates on credit cards are just unbelievable. And I think credit cards are a cornerstone of small business funding and cash flow management. And that's what I consider predatory lending.